Hello and welcome back to Cryptocurrency Trading Masterclass by Wealthy Education. In this video, we'll take a look at the Tron marketplace and we'll talk about some potential trades that could have been taken in this market. Now, unfortunately, we do not have a long history like with something like the stock market. And that is one thing that you will run into with crypto from time to time, but you make do with what you've got. You can place your lines like you would any other time. So, for example, 4 cents, I think, makes quite a bit of sense because we have seen a lot of wicks here. And here would be like 5 cents, roughly. Let's go ahead and just mark it as 5. And I suspect, generally there's some type of symmetry to a lot of these lines, support and resistance areas. So here's 3. And I'm going to guess that probably 2 comes into play. And even 1 would come into play. So it looks like we've got a grid of about every cent something happens. And, you can even see that the high was basically 10 cents. And, did we have a reaction at 9? So these are the things you need to look at on a chart initially. Now, the most obvious thing on this chart is that we had broken to the upside and broken towards 10 cents almost immediately, first couple of weeks, and then formed this massive shooting star. This is a huge shooting star. It's over 2 cents. And in this particular market, 2 cents matters. That's quite a bit. So now that I'm laying all these out, you'll see that this is a grid that I think holds pretty true over time, and we'll demonstrate this occasionally. So we have all of these spots on the chart. You can see this massive shooting star. Put your stop loss on the other side. You break through the bottom of it and maybe wait for a break below the 8 cents level. Turns out to be roughly the same thing. And you can see the very first candlestick broke down massively. Broke down to 5.5 cents before rallying and saving itself for another hammer. So people were thinking, okay, maybe we're getting back into a bullish mode. Form this doji, and then finally it gave way. So there was a clear smash and grab type of trade. And if you look, this is an area that I would suspect probably could also be marked maybe at 5.5 cents for support and resistance. Looking at the weekly chart further, let's go ahead and put some volume on here. That's another thing, is that volume wasn't that high at this move. So that shows you that perhaps there weren't as many people interested in Tron at the moment. So looking at this, here's a candlestick that shows a massive input, but a massive rejection. You can see that it took months to actually get back up there. Again, a massive push to the upside at 5 cents. We pulled back. Well, here at this point, it's clear that we are trying to form something like this. That is a little bit of an outlier. And this is where we need to talk about liquidity. Liquidity is simply, is there enough order flow? Are there enough buyers and sellers? I suspect that somebody pretty big got into the market here. And that's why you get these nasty wicks like this. Because, if you come in, I'm just using basic numbers here, but let's say you want to buy 100 units of something, but down in this area, there's only like 20 units available. So then the thing is, you have to, when you put your order in, you have to find the next 100 and the market will fill you. Maybe it takes all the way up there to get that 100. And then that concludes with the wick falling back down where you find more demand. In these smaller cryptos, you are going to run into this problem. So if you're trading on the weekly chart, you're probably hanging on for the longer term. anyway, I guess is the point. You can see volume is picking up, so that helps with liquidity. Let's go ahead and drop down to the daily. Now, notice, and we don't know how this is going to play out, but as I record this, the 5-cent level mattered, and it looks like we're trying to form a shooting star. Well, where would you expect the shooting star to go? I think somewhere around 4 cents, maybe just a little bit under. So that is a potential setup going on right now. You could take a look at, this is kind of the perfect setup here. Get a nice push higher and a pullback to this hammer. You break above the top of it, and you eventually grind, especially once you get this very bullish candlestick there. So, simple candlestick trade. We can put our Bollinger Bands on, and we can say, okay, well, does this thing tell us anything? And this was clearly more than 2 standard deviations higher, so it shouldn't be a huge surprise that we had to pull back. We had the squeeze, and we got that candlestick with the volume that we like to see. So where are we going? Well, you have to look at the next major area. We're right here at the end of this day. We can put our stop loss on the other side, like any other time. We're probably going to make a move towards 4 based upon the bodies. In these thin markets, you want to pay more attention to the bodies. Not that you want to ignore the wicks, just that they carry much more weight. And typically that's true with most markets, but it's especially true with these very thinly traded new crypto markets. Notice that we're in a nice trend leading up to this sell-off and then continuation. That is something that you need to take into account as well. So let me get rid of the Bollinger Bands. So now I will let the 200 and the 50-day EMA show up again. Got a cross here. This is the golden cross, and it's spread out nicely. And in fact, you can see that it hasn't really come close to shutting down. And crossing back over for a death cross. And this is one of those scenarios where it can keep you out of trouble. You didn't necessarily have to mess with it. If you were a longer term believer in Tron, you bought and you'll just trade when it tells you to trade. In the meantime, though, even if you are that longer term trader, you look at a candlestick like this and you know that, hey, we're probably going to get a pullback. That's perfectly healthy. But if you know that ahead of time, it's much easier to deal with. Let's go ahead and take a look at the RSI. There we go. Overbought condition, not a huge surprise. Look at that volume spike that we pulled back. Not a huge surprise that we're getting overbought here as well. You would expect that. So you would expect the market to pull back to kind of fall into this area. Same thing here, pull back. Here, pull back. And it looks to me like Tron is very sensitive with the RSI. And it makes sense because, again, it's a small market. It's not a huge market. Take a look at this perfect setup. Volume, hammer, 1 cent, RSI oversold. That screams a reversal, and that's exactly what you got. It is a bit difficult at times with a market like this to read too much into anything, but like this double top here, while it wasn't overbought, notice how the relative strength index was dropping. That tells you that maybe we don't have the strength that it looks like we have. Got that double top M pattern, so if you break down below there, you can see that we fell. Formed a hammer, bounced to retest, formed a shooting star, formed another shooting star, broke back down, and continued the move lower. These thinner markets are a little bit difficult to trade on short-term charts. They can be done, but you need to be a little bit more quicker and a little bit more sensitive. So, for example, down here, oversold, you buy that, you aim for the next major area. That's 0.3 cents. overbought at 3.2 cents. You're looking for probably a move to 3. This is completely overbought. This gives you a little bit more of an opportunity for a move. But again, very difficult to trade this type of market in these short time frames. And that's why I think most people that are in a cryptocurrency like Tron are, what you would consider to be true believers. They truly believe in this specific crypto and what it's going to do for the world, as it were. Regardless, the one thing that you should be paying attention to is we're in an uptrend. So you're looking for buying opportunities. You're not looking for selling anytime soon. You break to a fresh new high and take out that 5-cent level. Then you begin to look for a place to place your stop, maybe about halfway between these levels that matter in the market. Or if we continue to drift lower, then you start to look at this 4-cent level. There's no point in fighting the market. It's a great way to lose money. You never do it. Again, though, you need to give yourself a lot of room in these types of markets in general. So that's why you're almost always better off either trading, at the very least daily, if not weekly. And you have to truly believe in the market that you're dealing with. As we are overbought, but we have broken above this resistance barrier now, one has to think that there will be buyers underneath looking to get involved somewhere right around, this 4-cent level. It's been important in the past. It should continue to be important. So I would expect a lot of buying pressure in here, but we are overbought. So that breather actually offers an opportunity. You have to think of it as going to buy a television or whatever. You want to pay $500 for it, or are you much more interested in it at $400? It's the exact same thing. The target on a breakout from here, there's really not a lot on the way up here that you can base a whole lot on. So you can either do an attempt to get back to the highs, or you can do an extension, fib extension. 1.618 is closer to the 8 cents level. It's not quite to the highs, but that is another route that you could take a look at. But in general, if you're trading in the weekly chart, you're looking for bigger, longer term moves. So a little bit different in that scenario. In the next video, we're going to take a look at Cardano, a cryptocurrency that seems to be moving up the charts as far as popularity is concerned, and we will find several setups worth taking in that market.